Let's bring in Gary Cohn, Vice Chairman of IBM, former Director of the National Economic Council. Gary, always a pleasure. Welcome.
Thanks for having me.
So how big of an inflation problem do we have here?
Well, look, we're 4.2%, which in itself is a problem. But then when you take the other side of the equation, which is wages are not keeping up with inflation. So we are losing purchasing power in the country. We've been talking about for the last couple of years the K-shaped economy. Obviously, the top side of the K continues to do well. There's data out there that looks like in the consumption patterns that the top Americans are consuming over 50% of what's being consumed, and the bottom Americans, which is the vast majority, 80+% of Americans, are losing consumptive ability every day. So as prices go up and wages don't keep up, they're losing the ability to purchase. And I think we have to think seriously about that and what it means.
And what do you do about that?
Look, what do you do about it? It's obviously not an easy solution.
Does the Fed raise rates?
Well, look, historically, the Fed would look at this as an opportunity to raise rates and potentially slow down inflation, slow down growth in the economy.
But then you risk jobs.
I don't think we're at a time right now where the Fed is going to raise rates. I think the Fed is on hold. I think we will see some interesting output from the Fed. I think that the Kevin Warsh Fed will look different than the Powell Fed. I think we will see less forward projections. I think we'll see less data coming out of the Fed. I think that Kevin will try and work the balance sheet down over time. But on pure interest rate policy, he's pretty locked into where the market is today. And I think they're locked in almost for the rest of the year here.
You say that about the consumer, and yet, I mean, part of the story has been resilience of the consumer. I know we've seen the savings rate go down, but if you listen to companies on earnings, and I highlight a lot of them right here, I mean, nobody's talking about a big deterioration. I mean, I shouldn't say nobody.
Where they say the consumer runs out of money at the end of the month.
Okay, fine. Kraft
and
Heinz.
Walmart says they're self-rationing gasoline.
Because nobody wants to buy Philadelphia cream cheese. But mostly, across sectors, what you hear is that the consumer is doing okay.
The consumer has been doing okay. Remember, the consumer got a windfall tax refund check this year. So refund checks were dramatically higher than people thought they were going to be. That money has gone through the system. Look, we do have jobs. The most interesting part of this whole equation, and I always go back to the JOLTS report because I'm JOLTS obsessed. Yeah. But if you look at the JOLTS report, we brought on about an extra 750,000 new job openings last month. So there's not a problem of work. Our unemployment rate stays steady at about 4.2%, but there is work to be had in this country. So to the extent the consumer needs to go out and consume, they can go out and work. What's troubling in those jobs numbers, and I don't want to spend the whole morning on that, is our participation rate does not go back up. We need more people to re-enter the workforce. We need people to take the jobs that are available. And as we've talked about before, AI is going to force some job retraining in this country, but there are going to continue to be jobs. This massive layoff wave that people want to talk about with AI, it's not happening so far. Maybe it's going to happen, but at this point, all of the data shows that there's a strong employment picture in the United States. So people that want to work can go work. There is some consumptive power, but you're losing consumptive power. If wages are going up at 3.7% and goods are going up at 4.2%, I think you're losing 50 basis points of purchasing power, which means people are being forced to make those decisions, whether it's cream cheese or whether it's Nikes or whether it's going on a trip or whether it's going out to dinner to McDonald's. We're seeing it in certain segments of the economy. We are seeing the loss of purchasing power.